Okay, let's take a look at problem 1-18A, which is going to ask us to drop or drop x's under the correct column. So it's a problem dealing with cost classification, and we'll go through these relatively quickly. Wood used in producing furniture. Okay, we need to identify, is that a variable or a fixed cost, and does it show up as a selling cost, an administrative cost, or a manufacturing, which would be a product cost. And then you need to identify, if it's a manufacturing cost, is it direct or indirect? Well, since wood is used in the manufacturing process, we know it's a direct cost and it's a direct product cost. Next question is it variable or fixed? The more we make, the more wood we're going to need. I'm going to assume it's variable. So let's slide that down and see how we did. If I can get it down here. Oh, this one's going to not slide exactly how I want it, so we'll bear with that. And sure enough, it's a variable cost and it's a direct manufacturing cost. Now, with regard to the insurance in the finished goods warehouse, that wouldn't relate to the volume of furniture we're making and selling, so that would be a fixed cost. And also it would show up, since it's finished goods, we're concerned with getting that or selling that to customers, so that represents a selling cost. The ink used in book production, all right, there could be some debate on this one. Let's slide down and talk about that. If I can get it to slide down right. There we go. Okay, it's certainly a variable cost because the more books we make, the more ink we will incur. Now, even though the ink itself probably can be identified to the book itself, it can't be identified in any economically meaningful way. So typically, small dollar amounts like ink, even fasteners in major production of sophisticated industrial equipment, also is considered an indirect product cost. Not that it isn't used and becomes part of the finished goods. It's that we can't identify it to the product in any economically feasible way. So we treat it as an indirect cost. All right, advertising cost deals with making sales, so we expect to see that as a selling cost, and I would expect that it's also fixed. It doesn't necessarily, the dollar amounts of advertising costs don't necessarily relate to the volume of selling or production activities we have. Property taxes on the factory, another fixed cost. Certainly it relates to the factory, so I would expect it to be an indirect manufacturing cost. Let's see if that's what we come up with. And it is. And boy, my little box here doesn't want to behave. Let me shrink the size. Hang on, everyone. Okay, hopefully that'll make it easier for me to move. The thread in a garment factory is certainly used on the garment, but we probably aren't economically in an economic feasibly way identifying the thread to the actual garment that's made. So it's a manufacturing cost. I think it's going to show up under indirect, and it's certainly a variable cost, right? The more garments we make, the more thread we will use. Okay, wage of a the receptionist in the executive office, fixed cost. It doesn't matter how many pieces of furniture we sell. Her wages will still show up and won't change, and it's an administrative cost. And let's see if we're right there. Shrinking this didn't make much of a difference. It just does not want to move the correct way. Look at how it just will not move. Wow. Okay. Okay, what I've decided to do now is just get rid of the blocks, and instead I change the color to white, and then I'll bring it to light as we get to it. So a salesperson's commission, I would think that's going to be a variable cost. The more we sell, the higher the commission dollars will be, and a selling cost. So let me turn that into black so we can see it, and sure enough, that's where it came out. All right, now let's take a look at shipping costs on merchandise sold. Well, shipping cost on outbound freight is usually considered a selling cost. And the more we sell, the more we'll incur. So we should see that as a variable cost. And that's what it looks like. Depreciation on the executive autos. Hopefully you'll know that that's a fixed cost. Normally, depreciation does not use the units of activity method. If it did, then it would be a variable cost. But typically, um, it uses a method based on time, and it's an administrative cost as well. Okay, let's slide down and tackle some of these others. Now we'll lose the titles up top, but hopefully we'll be able to remember the position of them. Magazine subscriptions in the factory lunchroom is going to be a fixed cost because the subscriptions will be incurred regardless of how many we're making, and I don't think we're buying more subscriptions based on the output we have, say, in a typical year. Okay, and it's an indirect cost. It's an, if you will, a fringe benefit, and fringe benefits, just like insurance, are part of a manufacturing cost. The wages of workers assembling computers is a variable cost and a direct manufacturing cost, right? They're working directly on the product, adding value to the product. Executive life insurance, probably a fixed cost that would be an administrative cost. Boxes used for television sets, that's an interesting one. I typically have seen the packaging is part of product costs, and sure enough, that's where it shows right here, a direct product cost. In other businesses where the dollar amounts were small, I've seen where the packaging was treated as an indirect manufacturing cost, so it would have shown up in this column. And it's variable. We'll use more boxes as we make more television sets. Zippers in jean production, we should see that as being a variable cost and a direct cost as well. Yep, and it behaves the same way. Okay, let's see, how much else do we have left here? Let me slide back up. Okay, now I've moved it to the screen and white out the answers so we can talk about it here. Fringe benefits, assembly line workers, well, we've covered that a little bit. That's going to be a manufacturing indirect cost. There's some debate. I've seen where they are used as an indirect cost when it doesn't have an exact relationship with the number of workers, and in other times, as in this case, they've got it listed as a direct cost. Both of those are correct. It sort of depends on what the specific fringe benefit is. It certainly is a variable cost, right? The more workers we have, it's more likely we'll have fringe benefits, but not always. We could have a fringe benefit that's a fixed cost, such as membership in a local gym, and they say the membership is $500 regardless of the number of the workers you have. If that were the case, it would be a fixed cost. Okay? We'll slide on down to the next one, the supervisor's salary in the factory. That's certainly an indirect manufacturing product cost, and it's indirect in relation to the product. The cost object we're talking about is the product, and it probably is fixed with regard to the volume of the products we're making. Billing costs. So the cost of billing our customers would be a variable cost. We would expect to incur more cost as we have more customers or more items to ship. And most likely that's considered a selling cost. It's part of the sales process. Let me move on. We've got just a couple more to do. Package supplies for international shipments. Variable again. The more international shipments we would have, the more packing supplies cost we would incur. And again, it's dealing with outbound freight, so that typically is considered to be a selling expense. And our last one, lubricants for production. And here we're back to that indirect cost. It's indirect because it relates to production equipment. The production equipment most likely is used to make more than one product, so it has an indirect relationship to the cost object, which is the products that we're making. And it's variable. The more volume we have running through the shop, the more dollars we will likely spend on lubricants on our production equipment. And that takes care of problem 118, everyone. Thank you.